Colleagues, good afternoon. I am happy to welcome you. We are beginning the press conference by the Governor of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zabotkin. And to begin with, we'll hear the statement of the Bank of Russia Governor Elvira Nabiullina following the Board of Directors meeting. Good afternoon. Today we have made the decision to keep the key rate at 21% per annum. Tight monetary conditions that have formed in the economy are to ensure a slowdown of inflation in the next few quarters. Since the October meeting of the Board of Directors, monetary conditions have tightened even more than was implied by the key rate increase. This additional tightening is associated with, among other things, banks' response to the regulatory measures taken by the Bank of Russia. Consequently, lending growth notably slowed down in November. We will need some time to assess how steady this deceleration in lending is and how the economy is adjusting to the new conditions. Therefore, we're taking a pause in raising the key rate. We will assess the need for a further key rate increase at our upcoming meeting. I would like to stress that due to the considerable deviation of inflation from the target, monetary conditions should nonetheless remain tight for a long period in order to secure bringing inflation back to 4%. I would now dwell on the reasons behind our today's decision. This time, I will explain them in the order our key rate decisions are transmitted to inflation. At first, the key rate translates into monetary conditions, then it influences economic activity, and ultimately it impacts inflation. Firstly, I will speak about how monetary conditions have changed since our previous meeting. When pricing a loan, banks rely on either the key rate level, if it is a floating rate loan, or the expected key rate level, if it is a fixed rate loan. Further, banks add a certain spread, or an interest asset, or a spread, as the economists are saying. And before the October key rate meeting, the spread between the key rate and banks' interest rates averaged about 2 to 3 percentage points for the most reliable borrowers. Today, it has expanded to 5 to 6 percentage points. In other words, interest rates have risen on average to the level that they could have been expected to reach, the spread being equal, with a key rate raised to 24% or even higher rather than to 21%. What are the reasons behind such significant changes in monetary conditions? This has been largely because of our regulatory measures we announced in advance that were needed to enhance banks' financial resilience. I would like to remind you that in 2022, the Bank of Russia introduced a number of regulatory easing measures. They were required to ensure lending to the economy on a continuous basis and in adequate amounts despite the sanctions and the freezing of Russia's foreign assets. These measures have helped prop up economic activity during the acute phase of the crisis. However, such easing measures cannot be permanent. They are implemented for a short term to address crisis issues. And in second half of 2023, we announced the start of their phasing out. Nevertheless, as domestic demand was expanding, banks continued to actively increase lending. Yet, the growth of the loan portfolio was not accompanied by a comparable rise in banks' capital and highly liquid assets. In order to avoid excessive accumulation of risks, we have been consistently raising the requirements for banks' capital and liquidity. This policy will continue to improve the financial sector's resilience and will not depend on the key rate level. We employ a number of different tools depending on the purposes. Some are aimed at ensuring financial stability, while others help achieve price stability. That said, when making our monetary policy decisions, we take into account decisions in the banking regulation. I would like to reiterate that the banking regulation measures are not intended to achieve monetary policy objectives. We have the key rate for this. Nevertheless, when making our key rate decisions, we do factor in the consequences of changes in the banking regulation, including their effect on lending activity. After the phase of the rapid increase in lending, banks are now moving on to a stage of using their capital and liquidity with greater prudence and reason. Further on, lending growth pace will depend on, among other factors, by the bank's capabilities to build up capital. Accordingly, the expansion of lending may be expected to be slower next year, while banks are to shift towards more conservative approaches when assessing borrowers' risks. We can predict this judging by banks' moderate plans to increase their loan portfolios next year. The effects of the monetary tightening started to manifest themselves in November 2024. The growth of the overall loan portfolio considerably decelerated. Moreover, the expansion of the corporate loan portfolio slowed down for the first time over a long period. The retail loan portfolio has remained virtually unchanged for the 2 months now. According to high-frequency data, credit activity remained moderate during the first weeks of December. Simultaneously, savings have continued to go up, driven by high deposit rates. Our today's decision will support the current level of saving activity. Secondly, the economy. In October and November 2024, economic activity remained high, propped up by growing domestic demand, including household consumption. This was largely the result of the accumulated effects of the fiscal stimulus, high credit activity over previous months, and increased household incomes. High-frequency indicators suggest that the situation is gradually changing. Specifically, companies are setting more moderate targets for output, postponing or more carefully selecting investment projects, and reducing their borrowing plans for the next year. As reported by the Banks of Russia regional branches, there are signs of cooling in construction, coal production, and metallurgy. Furthermore, there is a number of enterprises that have reduced the demand for labor. As a result, we observe a more active reallocation of workers from some industries to others that are still experiencing considerable staff shortages. This process is alleviating the pressure on the labor market. Thirdly, inflation. Inflation has accelerated in recent months, largely because of transitory factors. In particular, there has been a rise in the growth rate of prices for some food products, especially vegetables. This was associated with the bad weather that notably worsened the harvest for some crops. Another important contributor to the November statistics was the increase in the telecommunications and transportation tariffs. However, the high figures of October, November, and the first few weeks of December were generally the result of domestic demand that had been soaring during previous quarters. Factoring in the time lags, this overheating has been translating into current inflation, primarily its underlying components. Inflation expectations continue to exert additional pressure on prices. Households and businesses' inflation expectations are largely backward-looking, that is, are affected by the price dynamics observed in the past. Consequently, high inflation has a self-reinforcing effect through inflation expectations. In other words, high expectations contribute to elevated demand, entailing high inflation, which in turn further increases inflation expectations. In such a situation, even one-off factors might become persistent. In December 24, the growth of households and businesses' inflation expectation was also affected by the ruble weakening. When making our monetary policy decisions, we rely on the forecast of inflation and changes in its drivers. We are observing a notable slowdown in lending growth, which will have a significant disinflationary effect. Due to the accumulated inertia of inflation and the time lags of monetary policy transmission, this effect will be manifesting itself gradually. We expect that the inflationary pressures will start to weaken sustainably as the effects of tight monetary conditions increase. Briefly about external conditions. The main trends in the world economy have remained unchanged. Global economic growth has been generally decelerating. Export dynamics in Q4 24 have been slightly weaker compared to steadily high imports. Coupled with another package of sanctions, this negatively affected the ruble exchange rate in November. The actual tightening of monetary conditions and the accumulated effects from our policy will ensure a more balanced growth rate of imports in the future. I would now dwell on the risks to the baseline forecast. Pro-inflationary risks are still our main focus. In the first place, high and, moreover, still rising inflation expectation might extend the period needed to bring inflation back to the target. The longer inflation deviates from the target and the longer it stays at high levels, the longer the period of high interest rates should be for economic agents to restore their confidence in price stability. Secondly, the risks related to the labor market are still a key constraint hampering economic activity normalization. Thirdly, the risks of trade wars and a more notable slowdown in the world economy have become slightly higher. This group of risks also includes a possible rise in geopolitical pressure. the key disinflationary factor is a more substantial deceleration of lending growth than assumed in our baseline scenario, which might be facilitated by, among other things, banks' willingness to pursue more conservative lending policy. This might be the result from both tougher capital requirements and an increase in banks' lending standards. A major point of uncertainty is how the economy will be adjusting to the new conditions. When making our future decisions, we will scrutinize the influence of these factors on the economic environment. Winding up, I would like to speak of our future decisions. Today, the key rate is rather high, and combined with the banking regulation and more conservative strategies preferred by the banks, it means considerably tightening monetary conditions. We will need some time to assess all the effects of the current level of monetary tightness. And in February 2025, we will be choosing between two options. We will either make sure that monetary conditions are sufficiently tight, or return to discussing a key rate increase if the current overheating of demand persists while lending starts to expand again. Our main objective is to achieve price stability within a reasonably short period, and we will take all necessary measures to do this. Thank you for your attention. Dear colleagues, now over to your questions. Please introduce yourselves and identify your agencies. Marsha, please, in the second row. TASS Information Agency, Maria Stepanova, I've got a traditional question. What have been the options today that you've reviewed during the board meeting? We have gone over two options. Nothing changed, raising up to 22% and up to 23%. And the debate was around the factors or data that one should pay more attention right here and now. As they say, first of all, high inflation and high inflation expectations, but on the other hand, already strong deceleration of lending activity that is quite manifestly notable over November and the first half of December. Additional tightness of monetary conditions because of limited capital supply brought about by the strengthening of the banking regulation, which I would rather say normalization of it, and the demand slowdown. And so following our debate, the Board of Directors decided that in terms of the forward-looking policy, a more significant signal is the slowdown in lending. Now, if this is yet again confirmed by the February board meeting, then one may then recognize that the required tightness of monetary conditions has been achieved. Nastya, in the second row, please. Anastasia Savyelyeva, Interfax. Such an unexpected decision to keep the rate at the level of 21% begs for a discussion between the analysts whether this is an issue in your communicating with the market or this is some kind of an external pressure, particularly the latter, considering the recent criticism towards your policy and the high rate. What would you respond to this with? Well, you know, the criticism for our policy particularly strong during the high rate periods and the key rates being raised. I'm sure that you've observed it through so many years. So we are making our decision based upon our assessment of the situation and our forecast. And so in the situational assessment, I should admit, we've been very actively collaborating both with the banks and the real sector in the economy in order to understand what exactly is going on in the economy. Now, from the point of view of communications, we will be looking into what else can be improved here, because indeed being able to properly communicate whatever we decide is very important. So we're always trying to explain the rationale that is driving us. But let me remind you that in our March board review, we identified 4 triggers towards changing the key rate, to bring it up or to take it down. We see that there is a very special focus upon the current inflation and the inflationary expectations, which is indeed an important indicator. But let me remind you that amongst other important indicators was the slowdown in lending, consumer lending, an easing in the labour market, because we don't see this being a sure thing, but we definitely ascertain that the demand for labour in many industries has petered out, because we polled various companies, but also note the lack of inflationary risks in the fiscal area. So we need to take into account a whole aggregation of facts, because let me remind you that through the key rate, we impact the aggregate demand and the lending activity, and specifically within the lending activity, some very notable changes have occurred that you can also see. And actually, have we published our November? No, yeah, but nevertheless, the November data point to the slowdown in the rate of lending, and this is something that needs to be taken into account. Alexei Borisovich, I also think that an important thing, this is a very rare case when the Bank of Russia possessed a bit broader range of data in terms of the lending activity as well as the business's intentions and plans for the forthcoming months and the full next year. Truly, over the past 6 to 8 weeks, we've maintained a very, very close contacts with the manufacturers and the banking community. And we do see that the October board decision, and in as far as the key rate was concerned, we have went for additional tightening in October, and various other factors related to regulatory influence became stronger in curtailing the bank's ability to grow their credit portfolio, and they have quite significantly postponed the plans to grow this portfolio, both on the side of the banks as well as the borrowers. And so our frequency data as of December 15 demonstrates to us in terms of the monetary situation, we see a considerable slowdown compared to the November data as well as compared to the period when inflation was close to 4%. Dear colleagues, Oleg, please. Good afternoon. Oleg Sapashkov from Kommersant. Elvira Nabiullina, my question is going to be a bit long because over the past few months we've seen consolidation on the part of all of the executive powers to limit inflation. At least that has been demonstrated. And so what I was interested to ask you is that at the start of next year, several very powerful tools may start working simultaneously, limiting the fiscal spending, limiting fiscal subsidization, as well as the Bank of Russia will also deter lending to the over-credited borrowers. Have you estimated the risk of this combined effect may produce a much stronger impact upon the economy? And do you have any tools available in order to counter this possible outcome? Thank you very much. Yes, indeed, considering the available lags that we observe in different policy activities, now comes the time for all of the measures previously undertaken to really come together in terms of the fiscal policy and the inflation in 2023, as well as the effects from the planned easing in the banking regulation. I mean, apart from the easing in the banks, in the banking regulation that we previously announced, we also introduced certain novelties in terms of the macro markups, but we are notifying the banks in advance, giving them some period of time to get adjusted. But so once again, I would like to draw attention to this, that the banking regulation measures do impact the monetary situation and the tightness, but they are intended for a different matter, to improve the resilience in the financial sector. But the effects are going to be the strongest ones. And so our policy is aimed at avoiding extreme scenarios, because we should not allow the economy to continue overheating, because this overheating needs to subside, but at the same time we need to avoid the overcooling as well. Therefore, we are very mindful of this, and we indeed have strengthened the intensity of data exchange, not only with the government, but also with the businesses and the banks, in order to comprehend what not only has happened just by now, but what is the way they're going to respond to this aggregation of different factors. Colleagues, the next question online from Grigory Sakharov, Oriol Town. From the Oriol city. The Bank of Russia has been increasing the key rate for more than 1 year. 3 quarters have gone by, almost 6 quarters have gone by, but inflation is not going down. Now, if the increase in the key rate is not going to help, in this case, does the Bank of Russia has plan B to combat inflation? I am convinced that the key rate is working effectively because without it being raised, inflation would have been much higher. We estimated an alternative scenario. If we were to leave the key rate at the level we remembered since the autumn of 2022 until the middle of last year, which is 7.5%, then inflation not only would have been a double-digit one, it would have been much above 20%, maybe even 30%, because inflation expectations would have been growing very, very actively, and most importantly, inflation would have been accelerating. But the task of the monetary policy is not to reduce inflation, whatever the cost is. Our task is much more complex, to slow down the growth in demand in such a way so that this wouldn't be in the way for the economy to grow its production capacities and its potential. That is why we are moving gradually, consistently, not to create any damages. And every time we engage in a multifaceted assessment of it, because we currently see that under the influence of the key rate and the banking regulation, lending has slowed down already in all segments. And if this kind of lending dynamics remain, then gradually it will translate into demand and inflation. Certainly, we all would very much like the price growth to slow down quickly, but the economy is not in an ordinary situation. There are so many factors which make the ability to translate our key rate impact upon the inflation harder. So the approach is the key rate and patience. Thank you very much. Yana, in the second row. Yana Churachkina, RIA Novosti. Elvira Nabiullina, could you please tell us whether the central bank is planning to somehow fight the mortgage scheming, apart from the mortgage standard? Are you familiar with any new fraudulent schemes in the mortgage market? And similarly, it would be great to find out what kind of forecast the Bank of Russia might have. Do you believe it? It is possible for the developers to end up being in default, and what is the forecast that you have for the mortgage market? The mortgage scheming, unfortunately, stays. They're very diverse. They take all kinds of different shapes and manners. Regrettably, there is such a undue practice. But the mortgage standard is something that I would definitely like to mention because we lay our hopes upon it. The banks have agreed to this mortgage standard, and as well as a supervisory standard, with the help of which supervision is going to be pursued over the way the banks adhere to this mortgage standard. It will come into effect as of April, because we believe that will reduce the scale of such scheming. But we're not standing still with that, because we're not relying on our rulers, because we're sooner going to introduce the kind of regulation that would put a greater burden upon the bank's capital, as long as the schemes are being used whereby the consumers first are being allured by the low rates and then are being hit with the higher rates. So if the rates grow over 20%, so not in terms of the burden on capital, but in terms of the alleviated reserves, this is the first in payments. This is the first step that we're going to make. Second thing, we're going to discuss with the market the following approach if the above-mentioned schemes do not disappear. So this mortgage standard, there's going to be a normal kind of reserves placed under it, while in the rest of the schemes there will be a higher impairment requirements. I understand that people are willing to support the demand for mortgage, but that must not be done by deceit. In as far as the forecast for the mortgage market in February, it's 8 to 13, but you would need to additionally revisit it. As far as developers are concerned, we are watching out for the financial status of the biggest developers. I believe that I've already mentioned it previously, but situation in every individual case is different because there were such developers who were able to organically develop without increasing their debt burden, whilst others were developing aggressively, trying to really run after the growing demand, and they ended up being in a predicament. So I would say that we will see certain divestiture from various assets, a bit of a redistribution or reallocation in the developers market. Thank you. And colleagues, please. Sergei in the second row. Sergei Bolotov, the Russian Gazette. If I heard you correctly, you mentioned the depreciation of ruble amongst the pro-inflationary factors. So my question is, don't you believe that the measures to stabilize the ruble exchange rate during the period of its high fluctuations, that they're not fast enough? Wouldn't it be better to try and prevent panicking in the currency market rather than the other way around? Well, our position is that our currency market operations, apart from those that take place under the fiscal rule, are aimed at preventing the risks to financial stability and the market dysfunction. Dysfunction is when, because of various devaluation expectations, practically no currency is being issued, no currency is entering it. But we're not conducting our currency transaction based on the exchange rates or high volatility. Why? Because we believe that the market must find its equilibrium. Because if we start intervening in such situations, even when the volatility is high, the market players will get this feeling that the exchange rate is artificial because it's supported by the central bank. Because the central bank, leaves, then the exchange rate is going to depreciate, and that heats up the situation and it prevents to maintain a balance. And actually, we're going to see the higher volatility of the exchange rate, yes, because certain reasons, but it doesn't, we allow for it, but it doesn't mean that we're not concerned by it, because there is a bit of a segmentation in the currency market. We see it all, but at the same time, we are of an opinion that the exchange rate should remain a floating one. Then there will be a greater trust towards its market nature, because the central bank transactions should be limited to whenever there are risks to financial stability. Thank you. Colleagues, Elena in the row before the last one. Elena Fabricna from Reuters. Yesterday, during the president's press conference, he several times spoke about you and the central bank. Could you please tell us, have you had a discussion with the president about the current key rate decision? I think the president answered it all yesterday. I have nothing to add to it. Colleagues, please, Rita. Anya, you're right next to her. Margarita Mordovina, RBK. My question is also about currency market. Doesn't the central bank see a shortage of the currency liquidity for the exchange and non-exchange market because towards the end of October sanctions were imposed upon a broad list of the Russian banks, including the significant ones which were actively involved in the export-import operations? Aren't there any risks? If there are, what are the risks, and can you expect that after this particular round of sanctions, the volatility in the exchange rates will continue for a more continuous time than during the previous periods? But overall, we've got a more volatile exchange rate than we used to have before 2022. That's basically what we see. After each wave of sanctions, this volatility becomes higher. But the scale of it's growing higher. depends upon the depth of sanctions, sanctional coverage. But during the summer time, when sanctions were against the Moscow exchange, like the key element in all of our financial infrastructure, the high volatility persisted for a month. Well, then the market usually stabilized at a certain level, first of all, from the point of view of the fundamental factors of a current account and the trade balance, and also after each sectional round, costs increase for international remittances and payments. So sanctions which took place in November, these also brought about a high volatility. We see that such volatility effects are dwindling. Most of the companies, like the case used to be during the previous sanctions, are able to adjust to the new environment. But similarly, we also witnessed an additional fragmentation in the currency market, higher transactional costs. But in as far as the exchange dynamics is concerned, it's not the best way to prevent the systemic depreciation of the exchange rate. Ensuring the market nature of the way it evolves and low inflation, because low inflation, with all things being equal, makes the exchange rate more stable. Thank you. Next question comes online from Samara. Sabrina Samerova, Kommersant Volga newspaper. Sabrina, please go ahead. Good afternoon. May one state that the key rate was capped as it was, amongst other things, not to provoke inflationary expectations amongst household, because if that would grow, then the inflation would also become stronger. No. The fact of the matter is that the key rate works in the following way. It takes inflation down. I mean, the actual decline of inflation is the basis for the inflationary expectations to drop. If basically you support a low key rate level, then inflationary expectations, the other way around, they will be growing. And that would mean that the central bank is not undertaking sufficient measures to reduce inflation and the inflationary expectations. But once again, let me repeat it, that our rate works with a bit of a lag in time. I used to describe it already. And so the higher rate of 21% has been effective only since the end of October, while the whole of the transitional effect, it transcends through almost 3 to 6 quarters, whereby you can ascertain the full effect. So I definitely cannot agree that the higher key rate brings about higher inflation expectations and higher inflation. On the contrary, the inflationary expectations are impacted by the price dynamics, because households are really looking forward to see the prices starting to fall, but that cannot happen all by itself. You need to undertake certain monetary activities, and Alexei Borisovich will augment what I've been saying here. Yes, dear colleagues, in terms of the motivations behind the decisions, yes, it was well motivated. Not, to keep the key rate at 21% was brought about by the fact that the data that we received of the past 6 weeks, which described the actual lending activity and the intentions that the businesses have to grow, the banks to grow their lending portfolio, very convincingly demonstrate that the required tightness in the monetary policy necessary to slow down inflation has already been achieved. And simply because so far it's just about the 6 weeks period data, and we wanted to gain additional information which would reconfirm it. That was why the board of directors decided to go to issue a moderate tight signal that in February. Yes, we have slightly softened it up because, yes, it will reassess this, which means a slightly lesser probability of key rate growing than compared to what we were thinking in October. Colleagues, please. Lyubov, in the second row, please. Good afternoon, Lyubov Mehetova, Expert magazine. The forecast by the central bank in the course of the year has been reviewed considerably and updated. Do you can also plan to update your model again? Well, our forecasts are regularly being updated, and this frequency has been announced. It is 4 times a year by the time of the core board meetings, and in February we will do again. We will review and revise our forecast. This forecast can be updated, can materially changed or less materially depending upon what's going on in the world, what is happening in Russia, and how that may impact inflation and the inflation forecast. So these reviews, these revisions, is not something wondrous, but revising the forecast this year was a strong one. I mean, if you compare it to the start of the year and until towards the end of the year, right. And that reflects the processes that are currently taking place in the economy. As far as the model is concerned, we haven't got just one model. We have several of them. All of them have been disclosed. You can read them and learn them. You can criticize us. We invite experts to interact with us, which we do regularly. And so the modeling is something, as a tool, is continuously being improved, and we shall continue doing so. Marina, in the second row. Marina Pimenova, Business News, NTV TV channel. And in Christmas question, Dima from the NTV channel, he wrote a letter to Father Frost, and so his wishes came true. The key rate remained the same. So you, being the governor of the Bank of Russia, what would you ask Father Frost to bring to the Russian economy for next year? What kind of gift? I would ask him to make sure that our economy comes to a balanced growth rate. It means positive growth rate, not just for 12 months, but longer term, so that we can rest assured that the economy is growing consistently and constantly. Well, certainly like all of the Russian people, I would ask for the price growth to slow down and for the well-being to improve itself. But apart from Father Frost, we also have certain tools in our hands to make sure that this is exactly what is going to happen. Thank you very much. Next question comes online from the city of Grozny. Seda Magomadova, Chechnya Today information agency, please. Good afternoon. After 4 years of high inflation, people no longer believe that the prices will go down for goods and services. Inflation expectations continue to spiral. Does the Bank of Russia believe that the consumer trust in the area of price stability can no longer be held? Certainly we do not think that way. But you are quite right. After a lengthy period of high price growth, people find it difficult to believe in the future price stability. This is correct. We understand it. So this kind of trust can be regained only in one way: to bring down the price growth, to slow down inflation, to bridle it and keep it around 4%, which is our target for a continuous period of time. And there is nothing impossible, because I can remind you that we've gone through a period like that in 2017 to 2020, when many thought that that was a fantasy, that it was not feasible. But we do believe that it is possible. We see and we know how people are worried by growing prices, and the tools that we have enable us to achieve this outcome. So here we work in a close coordination with the government, which possesses its own toolkit, enabling it to more actively affect the supply growth in the goods and services markets. Thank you. Dmitry, please, in the third row. Dmitry Morocco. Thank you. Dmitry Morocco, Russia 24. And due to a tightening of sanctions against the international banking payments, are you planning to consider the possibility of investing into cryptocurrency and developing cryptocurrency infrastructure? Thank you. We do not consider this possibility because we continue to believe that cryptocurrencies must not be used as the method of payment domestically. We have agreed, we support it, and we promote the project in as far as the cryptocurrency is involved for foreign payments, but not for the domestic ones. So from the point of view of investing into cryptocurrency, speaking about the central bank, that really doesn't have any sense in it from the point of view of, its value retention is very volatile. On the other hand, we won't be able to use this asset to intervene into the domestic market to stabilize the economy, because the payments in cryptocurrency inside Russia, we believe, is something that should definitely not be allowed. Thank you. Maria, in the third row, please. Maria Filushina, Bitkogan. Won't today's the Bank of Russia decision, which turned out to be much softer than the expectations, be conducive in depreciating the ruble further? No, we don't think this way, because whatever one may say, our exchange rate strongly depends upon the trade balance, whereas during the previous periods it was dependent upon the capital flow. There is a certain dependence there, but it is much lower, and so the level of the interest rate through carry trade and other ways was producing an impact. But we are of the opinion that today's decision is not going to impact the exchange rate. Alexei Borisovich, will you say something? Once again, I shall repeat. Today's decision reflects the view of the Central Bank of Russia that possibly, the required tightness for the monetary conditions has been achieved. The one that will take the economy into the more balanced growth path, as well as the balanced exchange rate, because that would definitely create conditions for the lower inflation. Thank you. Dear colleagues, please, your questions. Natalia, in the third row. Natalia Trushina, economics desk in the Moscow Komsomolets newspaper. In order to stabilize the ruble exchange rate towards the end of November, you decided that you are not going to buy currency as part of the fiscal rule in the domestic market, which allowed the ruble to go below the psychological threshold of 100 rubles per dollar. Will the regulator continue this for 2025? Is there any psychological landmark, or less so, for the exchange rate, let's say for the duration of the first quarter? And do you expect a very dramatic ruble depreciation? And if that happens, what are you going to do? Well, I shall reiterate it again, answering your question. We have a floating exchange rate. We do not have any intention to maintain it at any certain specific level. And so, with this in mind, we conduct currency interventions, because the stoppage of currency acquisitions as part of the fiscal rule is also a bit of an intervention. If there are risks to financial stability, like I previously mentioned, currently we don't see any risk like that, but nevertheless, about the way the mirror ring exercise is going to take place next week, we are going to announce all of the parameters for 2025. Thank you. The next question comes online from Denis Yelahovsky. Good afternoon. As of the end of November, the Bank of Russia has renewed its monthly repo transactions with the banks. And as the market players believe, in order for the banks to be more willingly buying new Minister of Finance bonds, and many believe that it is combining with the tightened monetary inflation that may push the inflation much higher. I believe that you won't agree to this particular interpretation, but nevertheless, what was the rationale behind your decision? Absolutely agree with you not agreeing, and I disagree, because a repo transaction does not create any additional inflationary pressure. On the contrary, and actually, this is the kind of a tool that we've been using not for the first year. We do have situations with liquidity fluctuations in the beginning of the year and the end of the year because of the fiscal operation. Because, first of all, to begin with, the Minister of Finance fast tracks its acquisitions placing the bonds. And then the basic fiscal spending takes place, which gets shifted towards the end of December. And so there's liquidity fluctuations. Whenever they take place, our operations are aimed in order to boost the banking liquidity before the budgetary spending starts in the form of deposits in the bank's account held by the organizations which are in the budgetary spending plans, which reduces the pressure upon the market, which helps us achieve our inflationary outcome. Repo transactions is the refund kind of operation. As the fiscal spending is being reallocated throughout the banking sectors, the banks at every, the central bank at every repo auction is going to reduce the volume. And so by the end of the first quarter, it will all come to zero. That doesn't bring about the easing of the monetary policy. The long-term rate in the monetary market remains very close to the key rate, right? Yes, exactly. This week on Monday, the amount of acquisitions was much lower than the liquidity offered, which proves that the liquidity overflows are not at the kind of scale that one should have been expecting. Grigory Bajenov, Popular Economics and Economic Science publication. My question is this: does the Bank of Russia believe that as a result of the volatility growth and the structural changes in the currency market, one should review the exchange rate fluctuations impact upon the exchange rate will be deferred? And also, as we understand that apart from this, no other interventions are taking place, and the Bank of Russia prefers a much quicker adjustment to the structural changes rather than reducing the volatility and such kind of an uncertainty. Well, indeed, the floating market rate we consider is the one that helps the economy to adjust itself to the external conditions much quicker. I mean, the ones that impact the currency exchange rate. As far as any effect being carried forward, let me ask Mr. Zabotkin to comment, because every now and then we do estimate it, and the currency exchange rate is currently is getting changed, and so Mr. Zabotkin will explain. Yeah, the carry-forward effect, we believe that the assessment of this particular outcome, which is 0.05, 0.06, that has been there for quite a considerable period of time, if I'm not mistaken, since 2018, if not from 2017. It is still relevant, but you need to understand what does it relate to. It relates to temporary exchange rate fluctuations getting carried forward. It may happen that way, forward-looking, and then it bounces back. If we deal with exchange rate changes because of a stable change in the external environment, then this carry forward is going to be much significant, although spread out in a time period. So here you must very clearly understand what you mean by the carry-forward effect that we are disclosing. And I think I should agree that the carry-forward effect is not a linear one. Against certain more significant fluctuations, it is quicker. It manifests itself much quicker. Artyom in the fourth row. Good afternoon, Gordon Artyom, Invest Future. My question is going to be about the presidential decree to double the capitalization of the stock market up to 66% from GDP by 2030. And so it's interesting for me to find out what you think about it, whether the stock market growth is parallel to the economic development. And if that is the case, is it possible to achieve the target of doubling capitalization without the inflation growth? Thank you. Well, indeed, that is a very ambitious goal, considering this pace at which the stock market used to develop itself during the previous period, because that would mean a considerable increase in the development rate of the stock market. The stock market capitalization is dependent upon many factors. You should agree. Investor expectations, the business future, macroeconomics, and of course capitalization growth depends upon the rate of economic growth. Certainly capitalization may grow faster than an economy as long as there is a initial private offering by individual businesses, by growing the number of such companies entering the capital market, where we have a very good potential for growth. And that is why the stock market may grow faster than the economy. But for that end, we believe you need to have a stable, low inflation. As applied to the stock market, that would mean that the discount rate is going to go down, because the discount rate depends upon the risk premium with regard to specific securities and the interest rates. And that is why inflation decline in many ways is going to be yet another positive consequence, which is the stock market developing further. Thank you. Anastasia, in the third row, please. Thank you very much. Anastasia Bashkatova, Independent Gazette. My question is, previously, President Putin, during the Russia calling forum, issued a direct task for the government and the central bank to coordinate efforts in between them, and in a collaborative effort to look for the golden middle in the monetary policy. Will that mean that the central bank is going to collaborate with the government in some new special way? And what are the innovations that we're to expect here? Will the central bank consider that the high key rates definitely creates a certain burden for the fiscal system because it has to be subsidized? Thank you. Well, as far as our collaboration with the government is concerned, the principles of such interaction remain the same. The government makes up its mind based upon the fiscal capacity, fiscal plans, national priorities. The Bank of Russia pursues an independent monetary policy in such a way so that the economic demand, I shall repeat it again, so that this demand, bearing in mind all of the circumstances, including the configuration of the fiscal policy, wouldn't translate itself into the price growth. And actually, the normalization of the fiscal policy, like I've used to say already next year, it would mean a more restrained approach to subsidized mortgage and lending, and would work towards lower inflation. Something that is particularly sought after today, as we think, in terms of making this coordination better, is the frequency and density of information exchange, as well as the monitoring upon what is currently going on in the economy. Like during any complicated period, situation today evolves very, very quickly. And as they say, we need to really make sure that we stay on the same page and do it more often, so as to better understand what not only going to happen in inflation, but also in the economy sector-wise. Actually, we have increased the frequency of our coordination, not only with the government, but also with the business community, because the situation in different industries is also very different in between different companies as well, and we need to really keep our watch on it. But as far as the fiscal burden is concerned, yes, the budgetary spending growth to service the sovereign debt and to pay within the subsidized program, because the subsidized programs have been formulated in such a way so that all of the interest risk is something that the fiscal system carries. And that is also the reason to alter our approach to such subsidized program. But that higher burden is temporary for the period of high rates. But if you put inflation aside, then you would need to increase indexation, covering a very broad spending line item. Because if you set a higher indexing, that you create a bigger base, and then a bigger base. So in terms of the fiscal outcome, I mean, the high inflation versus the key rate generates a much more serious ability to manage things. Next question online from Volodya, Alexei Tretyakov. The Red North. The high rates incentivizes business to invest its free cash into banking deposits rather than into developing production. At the same time, loans both to households and businesses are not available as they used to be. So in this way, how banks are going to ensure high income on an account? Out of which kind of resources? deposit interest the banks pay at the expense of the interest that they charge on the loans issues. As is known, that the credit interest usually are higher than deposit interest. For example, the difference, the credit interest compared to the deposit interest last year, it was 4.7%. The difference, which is quite material. And so this year, during this year's 9 months, yes, we see that this difference has slightly gone down, 4.3, but it is still a big one. But lending activity shall continue growing at a lesser pace, and that is why the banks have a very reliable source to pay interest on deposits. There's nothing to worry about here. Sometimes I hear a question, why such high interest rates on loans? Who is taking loans against such interest rates? Primarily businesses do. And although we used to say that the lending to businesses in terms of its activity has subsided, but they still remain in the positive. And so the prevalent majority of business borrowers, they take loans at floating interest rates linked to the key rate, hoping that once the key rate is going to go down, their payments will be lower. And so, yes, the demand, very high demand for lending remained until October. Well, yes, we do see that the lending activity is cooling down. What does it mean? If the demand for lending cools down, the loan interest rates are going to go down. Like in any market, if demand subsides, the prices follow it. And so once it happens, the banks shall also gradually reduce the deposit interest they pay. Effectively, your question is, speaking economically, whether the banks has the capacity to connect these two processes together. Growing volume of deposits, and so on and so forth. Can they manage their interest risks? Yes, they can. This is something that we're continuously monitoring. Thank you, colleagues. Is there anybody who was missed out in asking a question? Irina, in the last row, please. Good afternoon, Irina Akhmadullina, Money Doesn't Sleep channel. Lately, the Russian stock market is very much looking towards the private Russian investor, and unfortunately, there are more cases of fraud from the owners of major Telegram channels, and not only mean individuals, but also businesses. Is there any system whereby the exchanges, the brokers, the Russian Communication Oversight Agency works together in order to develop transparency in the market? You're absolutely correct, because we've just spoken about the need to improve capitalization of the Russian stock market. You need to have transparency in order to do that, not only in terms of the reporting and disclosure by the issues, but also in terms of how pricing is being achieved. So the transparency of the stock market is the key thing. We already have information exchange with the Moscow Exchange, with the professional players. They report to us various anomalies and abnormalities. We act abruptly and quickly, because the bubble kind of an approach was common in 2023, and so usually amongst the third-tier stock issuers. But currently we do see that they're very sparse. They're not often. And so together with Moscow Exchange, we have introduced new tools which enable one to deter price volatility, to curb it, to destimulate anyone thinking about to resort to such a practice. And so we've been able to prevent quite a few attempts at destabilizing pricing. Telegram, I think, is just one channel, because there are so many other channels who are after manipulating the market, and that was a very popular one. So that that topic will definitely remain in on our radars. Thank you. Angelina, in the fourth row, please. Angelina Rumiantseva, Frank Media. I guess that I also have a Christmas kind of a question. What do you think became the biggest problem or the biggest challenge in 2024 for the banking sector? And were the banks, have the banks been able to manage it? Well, it's difficult really to describe this question as a Christmas one, but nevertheless, summarizing, drawing the line towards the year end. But overall, the banking sector feels itself in a stable way. The banks have been developing, lending has been growing. But speaking about the challenges that the banking system had to face this year, I guess that is the series of sanctions against the Moscow exchange, creating difficulties in cross-border payments on behalf of customers. Let me remind you that we've got 129 banks currently under the sanctions. 12 months ago, there used to be twice as little. Under the sanctions, I think we've got about 95% of the banks. I mean, the banks who've got 95% of assets, operating assets in the market. But one should say that even irrespective of this kind of level of sanctions, the banks are able to remain stable, resilient, find ways to operate. And so your question was whether we've been able to really respond to and manage this situation with the major challenges. Yes, I have. It doesn't mean that there won't be a risk like that in the future, but bearing this in mind, it is very important for the financial system to remain resilient. We are very much watching over it, and so the banking regulation, we are fine-tuning it every now and then in order to ensure its longevity. Thank you very much, colleagues. Nikita, you are here for the first time with us? Yeah, right, Nikita Prokofiev, Pro-Finance Company. My question is, does the central bank plan to stimulate the growth of the number of the qualified investors? And on the other hand, whether there are any plans within 2025 to impose certain limitations to protect non-qualified investors? Thank you very much and Happy New Year. Thank you. And as far as the quantity of the qualified investors is concerned, certainly it would be great if we have more of them. But the quality of such qualification is also important. We've had a lot of arguing and debates with the market about changing the criteria for the qualified investor. It is very important for those who come to the stock market to be able to assess risks. So we think that when certifying the qualification of investors, very important it is to emphasize the knowledge, the experience, rather than the amount of money that an individual has in the pocket trying to enter the market. So such formal criteria, like, for example, the amount of money held, should be put into the background. And so these criteria have been changed, and in order to attain the status of a qualified investor, one will have to pass a special examination, which will be confirmed by a certification. And so the Bank of Russia shall announce the list of such certificates because there are already tutorials and softwares being offered in the market. There is an entity behind it. These are the same kind of educational programs that the Moscow Exchange and the big banks have. So to incentivize both the quality and the quantity of qualified investors is something that is definitely welcome. As far as limiting the risks to the non-qualified investors is concerned, that is another yet very important task in order to keep and support the trust towards the stock market, like we spoke previously about the transparency. In order for that to happen, one must not deceive non-qualified investors. So we're going to be quite cognizant and watchful over the products developing in the market, and if there would be any need for any additional measures, we will definitely undertake them. Thank you very much. The next question comes online from Anna Gromova. And finance program. Yesterday, the president said that there shouldn't be any limitations to the family mortgage programs. And there is another problem here that the borrowers face, that specifically the banks which receive various volumes about the government request for the minimum 25% contribution, they initiate their own requirements at 50% first contribution, which prohibits many buyers to go into the program. Can one somehow change it in terms of this imposition of such restrictions to allow other people really be able to enter into the program like the government decree is calling? Thank you very much for your question indeed. The main indicators, the main rules within the family mortgage is defined by the government. So the government government, to start with, has defined a minimum contribution level, which means that the banks in this situation are entitled to impose their requirements in as far as the first initial contribution is concerned. Yes, we do see that some of the banks do initiate such requirements, which are higher than the one that the government has identified. Well, there could be some reasons. When the banks do assess the borrower's risks, if the risks are high, then raising this level of the original contribution alleviates the risks. But there could also be undue practices. So if that is the case and we are monitoring the market, we will definitely try and do something about it, but we should not interfere in the bank's operations as such. Thank you very much, dear colleagues. Are there any questions remaining? Julia, please. Julia Tikhonova. Apart from the key rate, is there something else that can lower the inflation so the central bank can start lowering the key rate, if I may say so? Thank you. In order to reduce inflation, one needs a more restrained aggregate demand dynamics. And of course, inflation is being impacted by a broader supply of goods and services. But we're not in a position to influence this through our key rate. It is rather the government that can do this. But speaking about our measures on the supply side, broadening and strengthening the supply side in goods and services, that is for the government to do. We impact the aggregate demand. Now, the key factor in slowing down the growing demand in order for a sufficient slowdown in inflation will be slowing down lending activity, and we feel that it will take place due to the accumulated effects of the tightened monetary policy, but also a certain impact upon the lending activity will come from the banking regulation measures and macro markups. And here the purpose is different, to ensure financial stability in the banks, but that would indirectly impact lending dynamics. It would also work as a factor of lending slowdown, which runs in parallel with more tightened monetary conditions. Yet another important factor in inflation slowing down should be, and that is what we expect to happen, normalization of the fiscal policy in 2025. Now, when are we going to make a decision to reduce the key rate? You know, those 4 triggers that we've enumerated previously, and I should say that these remain active, remain on the table, so to say, but we'll certainly be broadly monitoring inflation, inflationary expectations, the business resilience, and further updating our forecast and consumer activity, lending activity. Alexei Borisovich, I would also like to remind you, as we used to mention in the main guidelines of the monetary policy back in autumn, the potential disinflationary effect may come from a more significant return on investments done in 2023-24, which from investment phase will transform themselves into output. And so if eventually that would create a better contribution to the economic growth potential in 2025, then disinflation will start taking place faster. Another very important measurement is certainly improving the efficiency of manufacturing processes, management decisions to improve the efficiency of resource utilization. As I told you, we are actively communicating with various businesses, and there are such of them that even without raising additional loans, without additional investments, just simply through seriously working on their business processes, they're able to cut the costs. And this is the kind of possibilities that many companies may resort to. My colleagues travel to various businesses, and they were able to see it with their own eyes. And we know that this is happening. When the companies will be up against the impossibility of carrying forward all of the costs, and that would invariably force them into starting to learn how to do it better. All right, Varvara, you are here for the first time also. Varvara Mikhalchova, Market Power publication. My question is going to be about the labour market. What is the level of unemployment that the Bank of Russia sees towards the end of 2025, and which industries are going to release their employees into the labour market in the first place? Thank you. The labour market, it's current situation is something that is so much important for us to be able to assess the capacity to increase the output, because the companies point to it as the biggest limiting factor. But in terms of the tightness in the labour market, the recent data tells us that it hasn't been growing in some of the industries. We're not making forecasts about the labour market, neither in between different industries, but indeed, we do see the first indicators that the demand for labour is softening down. And certainly it's not going to be even throughout the whole economy, flowing from one industries into other industries, from one businesses to other businesses. This process will definitely generate a considerable impact upon our assessment and decision-making, and as far as the monetary policy is concerned. Thank you. Dear colleagues, I guess this is going to be our last question. Levan, please. Ivan Schligin, Formac Rule. Situation with a high key rate leads to such an outcome that many investors prefer liquidity funds. There are so many investors and there's so much money concentrated there. But once the situation changes and the key rate goes down, these funds will no longer be relevant to work through. You will need to somehow get rid of them and divest from them. So it may form a bit of a risk for the whole system, because everyone would run in the single direction. Yes, we do ascertain that there is a higher level of interest towards such funds, and one of them comes from the higher key rate. But we believe that this particular instrument could be of interest both to investors as an alternative to banks' deposits. Why? Because the money market funds enable one to enjoy profitability, which is in the yield, which is close to the key rate, and also make it possible to take your money out without losing your accumulated income, which makes it a bit of an attraction and doesn't have a high entry barrier. Against the key rate, it's a natural process when resources and assets, and particularly the money, moves from one form into another. This is a normal kind of process. We see it in between different countries, which demonstrates a very high volume of the money market. We are not familiar with the cases when reducing the key rate may result in some dramatic run from such funds. Thank you very much, dear colleagues, and a Happy New Year, and let everything be all right with you.